See, hedge funds run many long short books, right? To go long, you can use the cash market, but then to go short, you will use the futures market. Minimize the impact, any kind of slippages, right? Is to actually cross a block. Now, when we talk about crossing a block, we are basically talking about finding a matching counterparty. Any block in India has to be crossed in the market. It cannot be done off market. In one of the organizations that I worked, I had like 6 screens. They were like literally all covering me.
We look at a lot of technical charts just to see where the volume is getting built up, where the trend is going and all. Do you guys also follow some kind of charting tools or techniques in order to place or whether to see whether the market, the stock is in a trend or something like that? How often do you guys would be using technical analysis as to?
Markets have been around for over 400 years in their official form and for much longer in spirit. Wherever there are markets, there are traders. From the days when people shouted prices across crowded trading floors to now executing orders within a single click from their home or from wherever they are, we have come a long way. Markets are not just numbers on the screen, they are a mirror to the world around us, constantly shifting with every decision, every innovation, every event. They are the frontiers of the human progress. But understanding how they evolve or where they might go next is never simple. Welcome to Off the Charts, a series where we break down trading holistically, explore the most fascinating and complex corners of the markets, and make them accessible to anybody curious enough to ask what really is trading. Hi, I'm Vaibhav Jain, your host for this series, and today we will be speaking with Manan Vaishnav. Manan has over 2 decades of experience working at top investment banks such as Deutsche Bank, CLSA India, and Goldman Sachs as an institutional sales trader. He has extensively worked with some of the largest mutual funds, pension funds, hedge funds, and HFTs that trade Indian listed equities, futures, and options. His areas of expertise are helping FPIs, that are foreign portfolio investors, access India, relationship building, client engagement, trading, and bespoke analysis using Bloomberg and MS Excel. In his current role, Manan heads Societe Generale Securities India, the securities business of the French bank Societe Generale. Manan is an orophile and loves high-altitude mountain trekking. He has completed the Everest-based camp in Nepal, Rupkund trek in the Gangotri range, and Sar Pass trek Shivalik range in the Himalayas. So let's welcome Manan on this show.
Hi Manan, welcome to the first episode of Off the Charts. Really excited to learn a lot from you today.
Thank you, Vaibhav. I've actually closely followed you on LinkedIn for such a long time, and it's actually a great honor to be invited to this podcast.
So, Manan, just to start with, just wanted to understand that what is actually institutional trading? What you have been doing over the last 2 decades in your role? Can you please walk through some of the activities you do in the institutional trading stuff?
So, institutional sales trading, as the name says, is basically servicing the large institutions which want to trade in the India equity and futures and options markets, right? Now, when we talk about institutions, what are these? These are very large market participants. We can, if I were to give by investor category, you can take as say the sovereign wealth funds,
Yeah,
the hedge funds, the insurance companies, the pensions funds. Then you have in the
mutual
domestic
funds,
industry your
of
mutual
course.
funds. Yes,
Yeah.
so all these are large pooled investment vehicles, and they want to access India. They want to trade India equities markets, and so the task of a sales trader or an institutional sales trader is basically to service these large institutions. Uh, a institutional sales trader typically works at sales trading desk. There he gives the market color. He gives information about what is hot in the market. He gives his views about what stocks are moving, what at what prices he can get blocks for the institutional clients who want to trade in large quantities, and basically giving all kinds of actionable intelligence to the institutional investors so that they can manage their portfolios better. So yeah, this is what an institutional sales trader does.
So Manan, that was a lot for the introduction. So let's do this. Let's break this into parts, and I'll keep on asking you whatever kind of to just deep dive into whatever you just said for the activities of institutional trader. So, like you said that there are various participants, there are various categories of the institutional investors. Let's start with the very kind of known thing, which is mutual funds in Indian industry. So if there is a mutual fund which is a large institutional client for you, so what is the process? So there is a fund manager, what we understand, for a mutual fund, from the mutual fund side, and they are taking their own calls as to which stock they want to enter, which stock they want to exit. Where does your role kind of fits in over there?
Okay. So see, the portfolio managers or the fund managers, they actually get a lot of actionable intelligence from different kinds of people, right? On the
Right.
sell side, that is the brokerage side. So they consume research. They also consume the sales trading color. They also consume the equity sales color, right?
Okay.
Now, when I say color, is basically the views of the market. Now,
Right.
typically with every portfolio manager or fund manager, you will find that there will be a buy side trader who works along with them. So, say for example, if a fund manager or a portfolio manager decides to buy or sell a stock,
Mm.
he then passes on the mandate to the buy side trader. Now, buy side trader, he basically understands the market, but at times his plate is so much full that he will need more color or more intelligence around how to trade a particular stock. So typically that is where a institutional sales trader comes into picture. Institutional sales trader is doing large volumes for different clients, right? So if he wants color on a particular stock, like what is happening in this stock, are any big is there any big buying activity over the past few days? Is there a big selling activity? Obviously, you cannot disclose any client details. That's the basic thing. But give them the color on what likely is possible in this stock. Give them your views about where the stock is going to move. And apart from that, many a times there are tactical decisions to be taken. Say for example, if it is a very huge quantity to be bought or sold, then advising on whether we can cross a block in this, or we can actually work it in any particular kind of algorithm. That is the kind of advice that a sales trader typically gives. And once the buy side trader is okay with that, then the sales trader also executes the trade. So yes, these are multiple ways in which a sales trader adds value.
Okay, so Manan, to understand that better, we can say that you guys are kind of an extended team to the portfolio manager, because he also has his own large team, the equity research guys who are sectoral guys and doing research on various sectors, various companies, and then you are also giving them color on basically where the market is going and all. So, is there any difference between what a value add you are bringing in as the maybe as the institutional sales trader, and what value his own team as a research guys they are bringing in?
So I'll tell you what the institutional sales trader, how they bring value is that the market is always live and real time, correct? What is happening in the market at that point in time, that is a color which only the institutional sales traders can bring,
Okay. All
right?
right.
So many a times that becomes very critical. In fact, most of the times it is very critical, because if you are going to trade a stock and then you know that there is some action which is going to happen in it, if you are not aware of it, uh, and you are made aware of it, then maybe your decision, maybe your quantity, maybe the price at which you are selling,
That
these all
makes sense.
things could change, and then it can actually impact your portfolio performance.
Understood. So just also wanted to understand, where you mentioned something around that. What are the various ways in which the portfolio manager can put the order into? I mean, are there's some kind of algorithms, like you break the large orders into smaller chunks, you trade using VWAP, kind of an algorithm, a mechanism like that. So is this also something which you guys suggest the portfolio managers?
When it comes to the order flow, the buy side trader, he typically he will give the order. He will also give the instructions of what is to be done with the order. Many a times he might want intelligence around it, and so he may actually ask what to do about this. Is this the right way to trade it or not? Correct. And once that is done, then obviously, as a sales trader, you have your own execution platform, and once the order ticket comes in, you put in the order, right? In the algo which has been decided. You keep tracking the performance, and if there is any deviation, then you immediately report it back to the buy side trader also, because it is it's not like you just put it in the algo and leave it. Markets are very dynamic, and so it
Yeah.
is just like driving a car. You cannot just be like putting the car on and putting it in a gear and then allowing it to go. it will definitely meet with a crash. So you will have to constantly keep a look over it. You will have to constantly study the liquidity parameters, if there are any blocks being crossed. So many things to keep an eye on, and then you can, then you have to ensure that it is complete.
Got it. Got it. So let me also bring little bit of a focus on a retail trading, how we as a retailer, kind of looking at how we trade. So there's something obviously we say in the retail balance is that follow the smart money. And then that smart money is actually the institutional trader, institutional money, right? We look at a lot of technical charts as to see where the volume is getting built up, where the trend is going and all. Um, do you guys also follow some kind of charting tools or techniques in order to place, or whether to see that whether the market, the stock is in a trend or something like that? How often do you guys would be using technical analysis as tools?
So this is regarding the sales trader, or you are talking for the institutional side, the buy side?
The buy side.
Okay, so I'll tell you, for the buy side, what happens is that, see, you are running a portfolio of a few $100 million, right? Just
Yeah.
imagine. Now, if you are supposed to make a buy or a sell decision, would you be comfortable just looking at a chart and then, taking a decision that, I should buy or sell it? Or looking at any technical indicator and then saying that, okay, fine, I'll buy or sell it. You are ultimately responsible for people's money.
It's a
You are
high stake
ultimately,
kind of a
it's a
risk.
high
Yeah.
stake, right? And
Yeah.
so there has to be adequate justification. So
Sure.
generally, those who are institutional investors, they ideally would look at the fundamentals more than the technicals. See,
Got it.
technicals is something good to have. It is, it is good to have a current color of the market. But then basing long-term decisions on technicals, I personally have not seen that happening.
And what about the sales side? I mean, because you are giving them the color of, let's say, every day of the market as to how the market will might behave for the current day or something. For that short period, is it something which you use technical charts and all for that?
Yes. So as a sales trader, yes, there are every sales trader does use some kind of technical analysis to an extent, and that is because the kind of work that you do, it is about taking a decision at this point in time, right? If the buy side trader asks you about a good entry point today,
Yeah,
right? Then ideally looking at the last few days chart and giving out a level would actually make sense. So if you have to take any immediate decision, or you have to talk about anything to be done in the present, to that extent, institutional sales traders, yes, they do use some sort of technical analysis, some indicators, but on the buy side, no, not really.
understood. Got it. Another question on mutual funds as the client, Samanan. Um, because you guys, the mutual funds are actually, kind of putting orders in crores and you say $1 million stuff. Do they only focus on the large caps and mid caps for that per se? Because in the small cap and the micro cap, you might not even get the liquidity. First question. The second part is that even if it is a mid cap or even a large cap, such a big order might move the stock price as well. Is there some kind of a trenching you are doing over the year, over the lot of kind of lot of days or lot of weeks that you will keep on buying some stuff and then probably look at that, or you put the bulk order in one?
No, no. So I'll tell you, it completely depends on the liquidity parameters, right? Now, if you look at, typically there are various kinds of schemes. There are large cap schemes, there are mid and small and mid cap schemes, right? For any investor, forget mutual funds, but for any institutional investor, the key risk consideration is that if you enter a large position during times of market stress, will you be able to exit that large position or not?
Oh,
Correct. So if you look at the aggregate market, you will find liquidity. So we have like what, 5,000 or 5,000, 5,500 listed stocks, right, in India.
correct, correct.
So, but the liquidity is found in the top 250,
Of
correct?
yes, yes,
So,
exactly.
so ideally, that is where most of the action happens, irrespective of the investor type.
That is why we see a very less holding of FIIs and DIIs in the small cap and the micro cap space, which is full of your
Because,
investors and the promoters itself.
yeah.
Got it. Got it. So, man, you had mentioned something about the block trade mechanism. Now, as I understand that there are certain players who want to, kind of offload a very large chunk of their holdings. Probably if they enter the market and start selling it in the open market, the price might get impacted a lot. So they would
Yes.
rather try to find a suitable buyer in order to cross their trade. Could you give some light on that stuff as well, and how your role comes into the picture over there?
Sure. So, see, the most common thing that an institutional sales trader will do is if a client has a large quantity either to buy or to sell, right?
Right.
Uh, like you said, if you put it in an algorithm, it may not always work because the liquidity parameters for each stock are different. So, another way in which to minimize the impact, like the impact and any kind of slippages, right, is to actually cross a block. Now, when we talk about crossing a block, we are basically talking about finding a matching counterparty. So
Yeah.
if some client of yours wants to sell, then you try to find people who are interested to buy. What happens is a sales trader will have numerous institutional clients, and so if a stock is in action, there will be at any point in time there will be some of his clients who might want to buy, and there might be some who might want to sell, right? So all that he has to do is match these if he has got the flow, he has to show it to other clients. If they are interested, he has to help negotiate a price, and then it is crossed in the open market, right? So that is how a block is crossed, and this activity keeps happening throughout the day. It's far more common on the institutional side, because the players, they are limited. The investment the trading desks are also comparatively limited. It is not like a one to all, like a retail market where you don't know who other retail participants are. You don't have that information. On the contrary, in the institutional side, most of the clients are empaneled with a broker, and so he has visibility of that flow.
Of course, of course. And to take
Yeah.
myself back into my investment banking days, what I remember is that being a part of an ECM team, we used to get clients' orders for selling their stake, and then we used to liaise with our, kind of institutional sales guys in order to find a matching buyer for those stocks. And what I remember is then when the block was being crossed right at 9:15, there were two traders sitting with their large terminals, one with all the kind of shares of the seller, and one with all the demat account of the buyer, all the details over there, and then you used to do like 1 2 3 and cut like
Yes.
stock. So what was
Yes.
that kind of a thing? Can you let us
So
know that?
once you have matched the buyers and the sellers, right? Once you have a consensus between the buyer and seller, and it's a very fine conversation, right? Uh, a buyer may say that he's okay to do XYZ quantity at so and so price. A
Right.
seller might say that, yeah, he wants to do this much quantity at slightly higher price, right? Once you have that consensus, once as a sales trader you have built that consensus, any block in India has to be crossed in the market. It cannot be done off market.
Right.
So typically, for crossing a block, you have to work in pairs. So you will have your colleagues. He will take either he'll take one of the sides. So the buyer's side or the seller's side. You take the opposite side, and then what you do is you enter the same quantity, you enter the same price, and then at the count of 1 2 3, you just hit it in the market, because based on price time priority, if equal value, equal number of shares and equal price is entered, then the buyer and the seller, they basically cross flows. The buyer gets what he wants, and the seller's stock is basically gone.
Absolutely. And what I remember
Yeah.
is that our efficiency was matched in order to how much slippage has happened. So if someone
Yes.
was like, if there were for 10 lakh shares being crossed and we could get the buyer only, let's say 9 lakh shares, so 10% shares got into slippage. So that was actually
Yeah.
not a good thing. So
Yeah.
it
It
was
was.
very
Yeah. It
important
was.
to match the microseconds when you are doing that one, two,
Yes.
three and enter.
Yes. Yes.
So,
So you have to be very careful if one of the parties enters the order a little bit earlier, then basically exchanges work on price time priority.
right, exactly.
So whoever's order enters first, anyone else who is present at that price point in the market, they will start getting filled, and then the other party will have the slippage.
Got it. Got it.
Yeah.
Got it. So, Manan, let's move on to the next set of market participants, which you discussed was the hedge funds. So, how do you think that the mutual fund participants and the hedge fund participants, they are different in terms of how the institutional sales trader is actually servicing them?
See, hedge funds run many long short books, right? Now in
Right.
India, the most efficient way to have a short exposure uh, is through the derivative segment, right? So when you have an underlying stock exposure, and if you want to go short on a competitor, like you want to do a pair trade, uh, so then to go long you can use the cash market, but then to go short
Correct.
you will use the futures market, right?
Futures market.
So
Yeah.
what happens is hedge funds, they typically require both long as well as short ideas.
Hmm.
Uh, Mutual funds, it completely depends on their scheme mandate. So every scheme in mutual fund has a mandate, right? Say, for example, an arbitrage fund can only do arbitrage. They cannot do anything else. In the same way, if there is any other scheme which has a mandate in only large cap stocks, it can trade only in large cap stocks. It will not be able to trade in, small and mid cap stocks, no matter how
Sure.
much convincing an idea is. That only a small and mid cap, mutual fund will be
Mutual
able to
fund
invest
trade.
in that,
Right.
right? So the thing is, as a sales trader, you should know what your client exactly wants. You should understand what his trading philosophy is, and then you have to tailor your advice accordingly.
Got it. And most of these hedge funds would be your FPIs, right? Foreign portfolio investors.
So
Or
in India, yes, it is the foreign portfolio investors who register. So it is hedge funds, and these are all global hedge funds who register,
yeah.
who get a foreign portfolio investor license, and then they access India, and they are able to take both long as well as short exposure.
Right. And then where would the prop desk kind of come in? So are they also institutional clients like participants, or they are a completely different category
No,
of
so you'll find props are so ideally they are a large institutional clients. They register over here as prop shops, and then they carry on their activity. Yeah,
so Manan,
so they
one
can be
question.
both foreign as well as domestic.
Okay, understood. So
Yeah.
one question is that obviously the institutional sales trader has his their own clients, be it any categories, any market participants. Can these trading desks can be housed in house as well? Do these mutual funds or these sovereign wealth funds, these hedge funds have their own in-house sales trading desk as well, or is it just like outsourcing it to
Not
maybe
sales trading. It is called trading. If it is on the buy side, then it is just called trading. Sales trading is basically for the sell side, right?
sell
Because they
side?
give
Understood.
research and they give the market color, everything, right? So yes, now since the last few years, what has happened is uh, the buy side has been getting direct access to the exchanges. It is called a direct market access. It is a direct
Okay.
connectivity to the exchange, and they use their algos. They can use even broker algos, and they can directly hit the orders on the market. It is actually called low touch trading, and there's someone to take care about if anything goes wrong with that flow on the broker side. But in that case, there are many clients who are, say, very quantitative in nature. They don't really require the research. They don't
Yeah.
require the other value-added services which the brokerages give. So in that case, they just take the direct market access, and yeah, they trade on their own.
Understood. Understood. In the long short hedge funds which you talked about, obviously the short exposure the participants are taking through the futures route. How much options are used, and which kind of players actually used options as a derivative instrument rather than futures?
So if we are talking about hedge funds, they typically use futures.
Yeah,
If we are talking about the market makers, then they are the ones who typically use the options market. Say, for example, if a hedge fund has to do a long short strategy, they may take the underlying position in the equities, and then if they take the short position in options, now options, they have a curvilinear risk profile, correct?
of course.
So then it becomes very I mean, the it becomes very difficult to manage the risk profile.
Delta keeps on changing with
Delta,
time,
yeah,
so
exactly. They'll all their effort will go. So which is why for long
yeah,
short they will typically prefer futures.
right.
But if we are talking about the market options market makers, then they are basically they are the ones who are present in the options markets.
Understood. Understood.
Yeah.
Uh, So Manan, because this is a very high stake kind of a work, right? Kind of a job. What are some of the risk management parameters or risk management systems which the sales desk actually, kind of a trading desk implies, so that they are safe, they are safeguarded for themselves through these $1 million losses if market moves otherwise.
So actually, if we look at uh, the exchange rules, right? So exchanges also have a very well-defined, policy of how much positions can be taken, what all is allowed as margins.
Right.
I mean, these are, publicly available regulations, which if you look at the website, exchange websites, will be able to know, right? So there are basic risk management, guardrails which are already built into the market. Then there is also every firm and every broker, right? So every buy side and sell side will also have their own additional risk parameters, right? It could be anything from being a very stock specific position level, or a certain price movement related parameter, or it could be at an aggregate portfolio level. It could be for an individual trader also, how much you allow, how much you don't allow. So there could be multiple variations, but the basic idea is first identify, then quantify, and then mitigate it and keep it within controls. So whether you talk about any risk mitigation methodology, this is what is followed.
Understood.
Yeah.
Tying up with one other question of what you spoke about the mutual fund as a market participant, there are days when there has to be some kind of a rebalancing in the index. I mean, obviously, it happens either quarterly or semi-annually, depending upon which index we are talking about. And on those particular days in the last couple of hours, I think if the ETFs have to, kind of sell some stocks, buy some more stocks in order to align with the latest weightages, whatever the, kind of NSE or MC has actually, kind of suggested,
Mm.
those days would be very busy for you, right? Because you are doing a
Yeah.
lot of stuff for multiple clients on those days.
Yes. So I'll tell you, any passive investor, okay, not just mutual fund, any passive investor,
Okay. Mm.
uh, typically, if they are following an index replication strategy, then whenever an index rebalance takes place, there will be some stocks which will be going out of the index, and there will be some stocks which will be included in the index.
Sure.
So basically, the flow is around, if whatever stocks are going out of the index, you sell; whatever stocks are coming in the index, you buy. Right? This is a
Correct. Of
general
course. Yeah.
methodology. And so what happens is, during those days, on that particular day, and generally this is done in the last 30 minutes, because in India we have the last 30 minutes closing mechanism, right?
Right.
So what happens is, you get orders from multiple clients, right? And during those days, you will typically get 800, 900, many a times 1,000 trades, right? You are overlooking for different clients, and everyone will have different price points, everyone will have different quantities. uh, you have to, and then you are working it in the last 30 minutes. It is fairly stressful. It can you cannot move even 1 minute away from the screen. Many a times the clients may suddenly change instructions. You have to be very attentive, you have to be very quick with your reflexes, and basically ensure that the flow goes on smoothly. There is no issue with the flow. There is no crash with your execution platform, execution system, and you are very receptive to what the client says,
And
and you are
and
very
in that
observant
half
in the market at that point in time. Yeah.
and in that half an hour, you are servicing multiple clients.
Yes. Yes. So your screen continuously, like multiple clients are sending several messages per minute to you, saying what is happening with this, what is happening with that, why is this line not getting filled, why is that line not getting filled, should I change the price on this? So lots of things keep happening at the same time. So it can be fairly stressful.
So just like we've seen in movies and pictures that a trader sits with 6 or 8 different monitors, is it with you as well? How many screens
Yes,
do
yes.
you have? How many monitors do you have?
In one of the organizations that I worked, I had like 6 screens. In the other one, they had two large screens, but they were like literally all covering me from left
Okay.
side to right side, wrap around kind of screens. So
Right.
yeah, I mean, I have worked. In fact, if you look at my LinkedIn, you will see those pictures. I've
Okay.
already posted about my
Fine.
workstation setup here.
So, man, how has your career journey been over the last 2 decades?
So it's been a very interesting journey. I actually came from a small town in Gujarat, and after I completed my studies, and uh, I came here because I was interested in the markets. I was very interested in equity research, so I began my career in equity research. But then later on, I realized that I'm really interested in sales trading.
Mhm.
So gradually, through sustained push and obviously, industry networking, I made a transition into the front office trading. And after that, I've traded across various asset classes, right? So I've traded equities, I've traded futures and options, I've traded bond futures, I've traded currency derivatives. So yeah, I mean, it has been a very enriching experience. And I've traded at some, I've worked at some really marquee firms. Like if you look at my LinkedIn profile, you'll be able to see what all firms I have worked at. So it has been a very fulfilling career. It has been a very enriching career for me.
So, man, you shifted from your equity research to the sales trading side. What made you move go into that kind of a change, and what was different? I mean, what was the trigger point, basically?
So, while I began my career in equity research, it was mainly outsourced equity research, which means that I was researching stocks which were listed in US, UK, all the other,
Okay.
Western markets, right? Now, I wanted to do something which was India specific. And, in due course of time, once I, got to know about sales trading, institutional sales trading as a discipline, it just fascinated me. So then I knew that I need to have a go at it. And that is where, since I was in DB, at that time, there were, very employee friendly policies of, desk rotations, which was allowed. And in due course of time, I could actually make it to the front office. So
Okay.
that is how I made the switch. Yeah.
Awesome. And since then, you have continued with this,
Yes.
love
Yes.
this job.
I have, I think, I have really loved. I think it was one of the best career moves that I made because that has formed the bulk of my, professional career. So yeah, I mean, it was a very correct decision, and I'm actually thankful that I took that decision.
So, Manan, what are the skill sets one would need in order to get into this kind of role?
Okay, so there is no course in the world which can teach you specific skill sets for being a sales trader. But if I
Okay,
were
all
to
right.
break it down, yeah, I mean, there's no course as
No
such, right?
B school, no
But
courses,
nothing,
CFA, CMT,
nothing.
nothing. Okay.
Nothing. See, I'll tell you what matters is if you have understood the kind of work that an institutional sales trader does, right?
Yeah.
The skills are basically the ones which help you to do that work quickly and efficiently, right?
Hmm.
So the ability to quickly understand numbers, the ability to make quick, even approximate calculations, the ability to quickly understand instructions and train your reflexes to do things very
Right.
quickly, right? The ability to read a lot, process a lot of information, and write concise summaries. These are the things which will actually help you. And then obviously it goes without saying that you are in a client facing role. So having very good communication skills, persuasion
Of
skills,
course.
these are the ones which will actually drive the blocks, right? Or it will actually get you trades. So these are the basic communication skills, basic mathematics skills, quick reflexes, quick thinking ability. These are, the 4 or 5 things which a sales trader is highly dependent upon.
And whatever I've understood with this conversation, I think it's a very high pressure job because let's say during those days when you are crossing the ETS of block trades and all, split second difference makes kind of
Yes.
difference about
Yes.
lot of like
Yes.
million dollars trade values. So how do you personally handle the pressure? Now it has been a long time, but how have you been through?
So see, it all begins when you fail at doing something which you should have done, right?
Okay.
And failure actually teaches you how to handle stress. See, in this line, people do make mistakes.
Very.
People do end up doing things which they should not have done, or instructions they should have followed quickly. They are not able to follow that. But then over a period of time, it becomes muscle memory. Over a period of time, you also know what the client's reaction is going to be if you do not do certain things, right? So you train your mind to be able to anticipate problems and take corrective steps beforehand, correct? So that is how you try to reduce the chances of failure. But even if it happens, it happens. I mean, everyone has a bad day, and next day you have to come back to the work, and you have to think, not think, keep thinking about it. The best way is to not think or ruminate about what has gone wrong, and what you have done wrong. If you are able to walk away from your failures also, you will be able to handle stress far more better.
Understood.
In
And
fact,
typically,
I'll say that you will become comfortable with handling stress,
all right, all
because
right.
you cannot reduce stress. So you just have to be comfortable. It's like, sitting in a hot tub of water. Initially, your skin may burn, but at a later date, it just becomes comfortable.
No, no, see, I can imagine because as a retail trader, I mean, looking at a six-digit investment amount or, kind of capital we are playing with the 5 lakh, 10 lakh kind of a money. And we become a little, kind of, whenever we see red in the portfolio of, kind of early thousands, 2,000, 5,000, it becomes a little stress on our heads. And when you are doing it for $1 million kind of transactions in split seconds, I think obviously it's a very, very big, large
And many
kind
a
of a
times what happens
responsibility.
is the client asks you for an advice, you give the advice, and then that advice goes wrong because markets behave in their
Of
they have
course.
their own, right?
Yeah.
And so you have your clients also who are saying what happened with your trade. Many a times you have to tell them, I think we should cut off the position, we should book a loss, right? These are difficult conversations. So yeah, I mean, but sales traders keep having this, and everyone understands in the markets that no one can keep predicting the markets correctly all the time. So these things happen.
So, how would a success of a particular institutional sales trader be? Like, is it like being right most of the time, or your execution capability should be, kind of very effective and efficient? What all things are actually the clients looking at when they are maybe, kind of tying up with an institutional sales trader?
So execution efficiency is one. Like how little is the time to market? Say, for example, if they give an order, in how much time you start getting fills, right? That is one thing. Ideally,
Right.
that time should be as short as possible. Second thing is, once you have started the order, what happens with the price? Like if price starts running away, then you should have that presence of mind to immediately inform the client and ask him, like, do you want to take a decision? The price is if you are buying and the price is going higher, should we just like buy and get done with it, or do we want to keep waiting, right? So that presence of mind, that reduced time to market. And the third thing is having a very good working relationship with your client, right? Understanding his thought process, understanding how he makes his investment decisions. These three are the most critical important factors uh, for ensuring long-term success in this career.
And how, as a sales trader, how much are you dependent upon the quality of the sales guys, institution sales guys who are maybe with your firm? I mean, obviously, because they are getting the clients first. And are these two different departments in most of the
Yeah.
firms,
Yeah.
or they can be the same as well?
No, 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 they are not same. They are different. See, institutional equity sales, these guys, they are the ones who typically, so like just imagine if you are a fund manager, right? Now you have empaneled with there are like 25 or 30 top institutional brokers, right? So you have empaneled with them. Now all of them produce research. Like say for example, if a company declares its earnings, quarterly earnings, right?
Yeah.
If you come if you like look at your inbox in the morning, there will be like 30 40 research reports for every single company which is hitting your
Yes.
inbox, right? Like you won't be able to spend so much time reading all the research reports and what unique perspective each analyst has to offer, right?
Correct.
So that is where the equity sales people, they come into picture. They typically give snippets of that research report. They make the fund manager understand why a stock is why the research analyst is saying buy, sell, or hold on this stock. What is the likely near-term impact on of any anything that has happened with the stock on the stock prices,
Sure.
right? This is the typical stuff that an institutional equity salesperson does. Institutional sales trader, typically institutional equity sales and institutional sales trading, they work very closely with each other, because
Yeah.
often whatever discussion happens between institutional equity sales, ultimately the order, the buy or sell trade, it gets routed via the portfolio manager to the buy side trader to the institutional sales trader, right?
Of
So
course.
it's
Yeah.
it's it's a circular flow, and therefore you have to work in tandem. You have to work very closely, and basically from a broker's viewpoint, it is the integration of its research team with equity sales team and sales trading team, which
Hmm.
basically determines its success.
So what is your typical day look like? I mean, it starts at 9 a.m. or it starts much before than
No,
that?
no, no, no. 9:15 market starts. So, like all these years, right? Like I've generally woken at 5:30. I quickly start reading up what has happened in the markets, in the global markets, right? So, be it in terms of commodities, in terms of currencies, anything notable in geopolitics, like these
Yeah,
days, a lot of stuff is happening, right? So,
sure.
immediately start preparing notes, and that is where the reading and writing part comes into picture, right? Then, all over all these years, what the way this my schedule has flowed is wake up in the morning, quickly make notes, get ready for the office, reach the office by 7:30. In irrespective of whichever broker it is, in the industry generally morning meetings happen where research analysts, they
Mhm.
will come out with their latest research. The equity sales institutional equity sales people will give their own color, the sales traders will give their own color. That way you will get a complete roundup of what is happening in the market, right? So you combine your earlier notes with what has happened in the morning meeting, and then you start writing crisp 7 8 bullet points about it and blast it out to the clients. Once you do that, immediately they will, the communication with the clients, it starts.
Okay.
And then you start exchanging your views about the market, what should be traded, what should not be traded, how much quantity should be traded. And then by 9:15, during that time only, all your breakfast and everything is complete while doing this activity. By 9:15, the market starts. Once the market starts, till 3:30, you
Yeah.
don't even realize where the time flies, because it's a constant flurry of activity that
Okay.
happens. Yeah, and then once that completes, in many of the places that I worked, they have evening meetings also. So just to have a recap of what has happened during the day. uh,
Right.
you know, uh, if there is any particular opportunity in a particular stock which needs to be explored with a particular client, then try to focus on that. Uh, then once the evening meeting is over, then you typically go home. During while going home, you try to read as much as possible. There are many bits and pieces of the market which you may have missed. Plus, by the time it's evening in India, even the European markets have started. So you
Yeah.
start seeing, you start following not everything in depth, but at least you should have some kind of a color on different aspects of the market at any given point in time. As a sales trader, you should be in the know-how of all that happens, right? And so, which is why reading extensively and being able to crystallize it in the form of neat bullet points, thoughts, is very, very important. That is how typically the day ends. And then once you are back, you spend some time with the family. 9:30, 10, nights out, lights out.
10 obviously lights out because you're going to wake up at 5:30 again in
Again,
the morning.
yes, yes, yes.
So just wanted to understand, see, 9 to 3:30, so you're completely busy with your trading stuff. So your reading time, because as you said that there's a lot of reading needs to be done. I mean, not only
Yeah,
India, but macro basis, right? Uh,
yeah.
then talking to the clients, writing notes and all. I mean, where do you get time to read so much of stuff? I mean, how much time generally do you spend per day in reading? 2 to 3 hours or more than that?
Yeah, maybe 2 hours at least. And I use my travel time. I've always, over all these years, I've used my travel time as, I use it in a way that I have information at the tap of my fingers at any given point in time. I think most of the people in this industry, that is what they do.
So, Manan, what are some of the resources you are using to read? Because today there is an information overload. People are looking to find the right, kind of places where you can get the news from and stay updated. What are your resources you go to?
So, number one, these are all publicly available sources, right?
Of course.
There is no information asymmetry over here. And see, even as per fair market practices, all the information has to be released at all the platforms at the same point in time, right?
Yeah.
So you have publicly available, news websites. I'm not going to take any particular names, but there are so many of them, right? which are available, and they give specifically market focused news.
So Manan, thank you so much for your time today. A great learning experience for me. Me being a retail trader, getting an insight onto how the institutional trading side works. Probably I'll also try incorporating some of the strategies. Obviously, there are different ball games, but it was a great learning experience. And thank you for your time today.
So that was an episode with Manan Vaishnav, an institutional sales trader. I myself have been in the markets for over 15 years now. And I started off with cash delivery and then move on to do intraday trading. And then I started my derivatives, mostly options journey in 2013. And it has been a journey of ups and downs, but a very fruitful journey for me. On my educational side, I have done my MBA from IIM Indore, and I'm a CFA as well as a CMT charter holder. And now I teach technical analysis at IIM Indore second year MBA students as well. The closest I have come across working with an institutional sales trader was when I was in Deutsche Bank as an investment banker. I was working with the ECM team, and we used to get some mandates from our clients for crossing a block trade. This is where we liaised a lot with the institutional sales team and the trading team as we discussed in the episode, when we used to do crossing the block trades. And as we say, learning never stops. Today's episode gave me also a lot of fresh insights into how this industry functions. But what is it for the retail investor or a retail trader over here? See, being on the retail trading side and doing it for almost 15 years, we have generally heard about follow the smart money. And how do we follow the smart money? Place where your bets are, where the smart money is going, follow the trend is your friend, and all these kind of catchphrases. Now, this smart money is what institutional sales guys and institutional investors actually bring it for us. We generally use a lot of technical tools and charts in order to see the trend and accordingly take a bet. But one thing which I think works for us as retail investors or retail traders are that we do not have to worry about any specific mandates by our clients or any specific constraints that we are trying to kind of work and place our trades. Now we can take lot of good strategies as inputs from various sources and then experiment ourselves as to what is working for us. We don't need to worry about that our market size or our order size will actually move the market, because our order size is obviously going to be a very small amount compared to what institutional traders actually are putting. So a lot of takeaways from retail traders as well. Just stick to our strategies, put a proper risk management in place, put stop losses, and I think this is how you can make money from the markets as well as retail traders. So with that, see you in the next episode of Off the Charts.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.